folks, Dan Frio here, the Mortgage Update. Today is December 5th, 2019, and you're here again. Thank you so much. And you're looking at this number. It's basically the market's flat. This isn't a bad number. It's not a good number. We always watch daily. We want this number in the green. This is the price of bonds. And I'm going to go through the economic calendar, what to look forward to tomorrow. Today was kind of flat. Some unemployment numbers came out today. Nothing really there that was surprising. So let's get to it. What happened today? Well, not that much in the market. You still got the impeachment stuff going on and all this other stuff. But generally in the market, we had jobless claims came in at 203,000, which wasn't basically kind of in line. It was 10,000 off, but it was a holiday week, so it's kind of a skewed number a little bit. So not a lot of information or not a lot of emphasis is given to this number. Tomorrow we're going to have the Bureau of Labor Statistics number out. That's what everybody follows. That will, if there's jitters there or the number comes out as bad as the numbers came out on Wednesday, the employment numbers, you're going to see a move in the market. And I'm expecting this number to come in not so good. And so I'm cautiously on the sidelines right now. We locked, and those who follow me daily, you know we locked on Tuesday. And we timed it absolutely perfect. And that's what I do for all my clients. We monitor this. I monitor this for myself as well as my team. And we try to pick our spots. And it's basically us trying to pick highs and lows for you, because just an eighth or a quarter or 3/8 different in rate on a $200,000-$300,000 mortgage, it's a substantial amount of money throughout the life of the loan. So you're going to see tomorrow the main numbers is going to be the employment rates and hourly pay. Let's recap where we were in the last week or two. We had manufacturing information coming out that manufacturing is down. And it's consistently running lower and lower and lower each month. That's not good. And then we had some employment numbers come out yesterday, and we hit half the number that they were predicting is people getting jobs. Okay, so not a lot of people are hiring. This number that we saw today, the claims number, it's skewed because of the holidays. So let's kind of throw that out the door. We also track on this channel, and what I track is freight indexes. The freight indexes aren't going well. The only thing we have going in our favor is inflation staying intact. Okay, so that's a good number. So that inflation is a good number, like I said. So let's recap the whole thing. Manufacturing is down, hiring is down, jobless claims, let's throw that out the door right now. Freight indexes are down. We're going to find out tomorrow more emphasis on the employment numbers and hourly wages. If that comes down, we got some problems. And, a lot of these signs are signaling a recession. So let's recap what we do in these things. So we go back to this. UMBSs. What they are, mortgage-backed securities. Okay? So let's get actually a definition, just so you know what exactly is a mortgage-backed security. So like I always say, it's a bond. That bond consists of a bundle of home loans bought from banks and issued as a bond. And we track the prices of bonds. So basically people buy into mortgage-backed securities. Just Google MBSs or mortgage-backed securities and you'll see what those are. So it's a bunch of bonds or mortgages put together by banks and sold as a bond. And that is a mortgage-backed security. This is the vehicle that determines or creates or calculates what mortgage rates are going to be. And like I say every day, it's not the 10-year Treasury, it's not the 2-year Treasury or the 30-year Treasury. Most people think it's the Treasury bonds. It's not, folks. It's the mortgage-backed security. So if you're a mortgage advisor, a loan officer, a realtor, you could probably stump a lot of people saying, what determines mortgage rates? Oh, and 90% of the people are going to say, well, what did the 2-year Treasury yield do today, or the 10-year Treasury yield do today? And you're going to be like, well, that has no effect on your mortgage rates. Oh, yes, it does. So Get in that debate, and you're going to win it because you'll send them what a mortgage-backed security is. It'll explain it right here, and then you'll come out on the winning side of that argument. Okay, so where are we? Nothing's really going on except, like I said, tomorrow we're going to get employment numbers. So if those numbers come in bad in wage indexes, we're probably going to see a drop in rates. So let's recap what's going on currently. We watch two factors here. Well, let me rephrase that. Not two factors, but there's different indexes or lines that we follow. So when you're looking at stocks and bonds and a lot of other things, it creates technical ranges for things, okay? There's bottoms and there's tops. So these are Fibonacci levels. These were created by a person, I guess his name was Fibonacci, don't know. But these actually determine kind of the bumpers, where we're going to fit in, where are our trend lines through this. So let's recap this. This is the price. Remember, we're following this number. It's the price of the bond. So as you pay more for a bond, your yield or your rate of return or your interest rate is going down. So the more you pay for a bond, let's say it's a $100 bond, the more you pay for that, it's going to yield you a return that's lower. All right? So as the price goes down, rates go up. As the prices go up, rates come down. We loved this trend. Look at that. That was awesome. Started down here, ended up here. Huge move. And so these people might have got a quarter, 3/8, maybe a 0.5% lower in interest rates. It could be that big of a swing. Then it came back. So you're always going to get these ups and downs. What we try to do is time it. We're in this area here. So then we did what we were, that's what you hire us to do. Not just plug in some data, lock in a thing, and you're done. You hire us to do this on your behalf. And if your mortgage advisor isn't doing it, then go to another one. Call me. Okay, that's a plug. So that's what we did. So the other day, on Tuesday, I saw this happening, and it was kind of an anomaly of the day. It was like euphoria in the market. Trump came out and said there's no deal with China, and there's not going to be one until after the elections in 2020. You saw the stock market sell off, and then all of a sudden people took that money, they threw it into the bond market, and that drove up prices and drove down yields. We locked about $5 million worth of clients right in this range here. We timed it perfect. From there to there today, that's probably a quarter difference in mortgage rates. A quarter. I think $300,000 loan, I didn't do the math. Let's say it's $150 a month. Take that times 360 payments. It's a lot of interest that we just saved this person. Okay, so that's what we do on this channel. So tomorrow, what I'm thinking is, if the employment numbers come out as I'm predicting, they're not going to be great because all the signs that we have are stating that everything is going into that direction. Manufacturing, shipments, and everything is showing a slowdown. So I'm expecting a slowdown in, or it may be a little bit of bump in the unemployment rate. I'm hoping wages don't come down, because wages come down and employment comes down. You're going to see well, I hope it does, I guess, for mortgage rates, but I don't hope that for the economy. I'm not one of those ones that, I predict, I want the world to end so I can make a good living. I'm not on that side of the fence. So I want us all to prosper. Let's go over here. What's going on in the market news is the Dow was up 28. Investors, stock soar after earnings, but then they came back. Where are we going to see this? Oh, right here, U.S. government bonds. Well, that's the government bonds. Again, that's not the bonds we follow, but they kind of trend together a little bit. Not exactly the same, but you're going to see bond yields and flat awaiting the jobs report. Okay, that's the big key. If you've been following the channel, you notice, a month ago or 2 months ago, we're watching the China trade. Then all of a sudden it went to Brexit. Now we're back to the China trade. So there's always something going on. If you see the Middle East, there's major tensions or bombing in the Middle East, you're going to see the stock market drop and mortgage rates come back down. Because let's say there's a pool of money. You can invest that money in bonds or stocks. One of the two. Let's say you have two investments to pick. If the economy's doing bad and companies aren't hiring and companies aren't selling as much, that means they're not making as much money, so their earnings are dropping. So you don't want to buy stocks, you don't want to buy into a company, so you sell that company and you put it into bonds. So you know you're going to have a return other than sitting in the money under your bed getting nothing. So think of it that way. So when the economy is robust and the companies are doing well, you buy companies. If there's very much uncertainty on earnings and job growth and revenue and a whole bunch of other stuff, you get squeamish and you don't buy companies. Well, you don't want your money sitting in cash, so you buy bonds. That's basically the best explanation I have. So I got to run. It is Thursday night. The Bears are on. I'm going to predict they're going to lose. Sorry for those out there in Chicago. I think I bet my kids, I forget what I said the score was, 27-21 Dallas. I hope I'm wrong, and I hope the Bears come out and do very well. But I'm going to take off tomorrow night. I have a company event to go to. It's a dinner, my Christmas dinner with our teams. And so I won't be posting tomorrow. So God bless you. Thank you so much for watching. Please give me a thumbs up. Don't forget to subscribe down below. If I can be of any help, let me recap to everybody who I am, what I do. My name is Dan Frio. I do the mortgage update daily. You can hear me in Chicagoland if you're in the Chicagoland area. You can hear me on WYLL Radio. It's a Christian radio station I've been on for 13 years, and I have a radio show every night. I sponsor a lot of events. Recently, I sponsored a huge pastor appreciation luncheon and study sessions for pastors. You can hear me on that station every night from 7:30 to 8 p.m. You can also hear me on Saturdays on WIND Radio. So that's that part of it. And I'm Saturdays at 7 a.m. to 8 a.m. So those are the radio stations I'm on. You can give me a call at 844-775-LOAN. I hate when people do that, especially if I'm driving or whatever. I can't figure out what numbers are loan, so it's 5626. Look me up at the Frio team, the Frio, FRIO team.com. Look me up on YouTube. You're watching me on YouTube, but don't go to my main channel. I have over 400 videos that you can watch. Check me out on podcasts. I'm on iTunes, Spotify, almost every podcasting station there is. Check out my Google reviews. And if I could be of any help, I'm serving about 2/3 of the country right now. I'm still trying to get licensing in the rest of the states. That takes time, and it takes a lot of time, money, and effort, but I'm working on that for you. And also, please, leave a comment down below. I reply to every comment. So if you need my help, please reach out. I'd love to help you. So God bless. Take care, and I will be back. I might post a video over the weekend on what the economic calendar looks like for next week. If not, I'll be back, God willing, Monday night. So stay tuned. Have a great weekend, guys. See you soon.